Okay, I'm going to give this one a go. The suspense count notes. It's going to be a little bit tricky because I'm going to jump back and forth to a PowerPoint presentation that I'll make at the same time. So, what you really need to remember, what you really need to know in these are the rules for accounting. So, we basically have to know how to record purchases or payments and recording the sale of goods or receipts of money and what they're for. And once we know those and the rules around those, it should be okay. So, um, so we deal with the purchases or payments first of all. The rules are we debit what we bought or what we paid for, and we credit how we paid for it. So anytime we pay for something or buy something, we can only pay for it by bank or cash. So that would be the bank account. We could pay for it on credit, so that'd be the creditor's account, or we could pay for it using our own private money, which would be an investment of capital, so the capital account. So there are three things around recording purchases or payments. So if we buy goods, for instance, on credit, it will be debit purchases, credit creditors. If we paid for a new vehicle using our own money, it will be debit vehicles, credit capital. Or if we paid a debt owed to a creditor, it would be debit what we bought or what we paid for. So it'd be debit creditors. And how do we pay for it? We paid for, say, by check. So it'd be um, credit bank. So they're the sort of rules around buying goods. Around recording sales or receipts, it's the opposite. We credit what we receive. Or sorry, we debit what we receive. What am I saying? So, for instance, if we receive cash, we would debit cash. Um, if I can't really, if we were taking money out of business as a result, it would be debit drawings and so on. So mainly, our accounts will be bank or cash that we can receive money from. Um, we could take money out of the business, which would be private, so that would be drawings. Or we might receive a debt, so we're increasing debtors. So that would be our debtors account. So we then credit, in effect, credit the other account. So it could be credit sales, for instance. You could receive rent, so it would be a credit rent received account, etc. Okay, those ones will be hopefully be a little bit clearer as we go. Okay, and the last thing is then to remember the accruals account, that you only account for things in the period that they exist in. So that basically means that if you have a bill that goes into next year, you can have prepaids. Okay, so you can have prepaids and you can have dues, and you have to account for those separately to expenses or receipts. Now, I'm hopefully not going to confuse you too much around that, but if you just bear these two rules in mind, you debit what we bought and credit how we paid for it. We credit what we gave, in effect, debit what we received when it comes to sales or receipts. Okay, so what we're going to do with this one, we're going to look at the 2016 question. Okay, and we're going to work through the debits and credits for all of those, remembering our rules around our steps around correction of errors. So I'll just put those in. Our steps to correct errors. I won't always do these in the exact order, but generally step one is we show what they did in the accounts. You don't actually have to do this. It's not going to get you any marks, but I think it's a good way of a good philosophy of how to do these. Step two then is undo that. You undo everything by doing the exact opposite. So, for instance, if you've put on a credit on the a credit in the billings account, to undo it, you put the same number in on the debit side of billings. So you undo that, and I would say circle it in your pages. I'm not going to be in a position to circle these, but undo it and be aware of it. So I'm going to say circle it, and for this sake of these questions, circling it, I will make them. I'll say bold and red. Okay, and then we do what they should have done, which is this third step. Again, I will make them bold and red. Do what they done in circle. As I said, I'll make them bold and red. And what I mean by do what they should have done in circle is follow your rules of recording purchases or payments and recording sales or receipts. Okay. And with those in mind, I said I won't always do them in the correct order. Some of them I will. A lot of the time I like to do step 3 first, which is do what they should have done in circle, because it gives me a nice enough guide. But maybe for the sake of these questions, I'll try and do what they did, undo it, and do what they should have done. Just to make things as easy as possible around following them, So anyway, let's look to the questions. So this could be a little bit tricky, but we'll see how we go. Right. So always try and find out in the questions, what are they asking? So what are we looking to record correctly? So first one is coffee tables purchased on credit for 2,800. That is the double entry we're going to do. That's what we're hoping to do correctly towards the end, right? So that will be our step 3. Coffee tables purchased on credit. How do we deal with that? So just bear that in mind. Now, for this will be number 1. What did they do? They had been entered on the incorrect side of the creditor's account. So coffee tables purchased on credit would be, let me see, the two accounts would be purchases and creditors. They would be our two accounts, okay? So what would my rules be? Coffee tables purchased on credit. It would be debit purchases and credit creditors. Okay, debit purchases, credit creditors. So if credit creditors is the correct side, well, if they've put it on the incorrect side, well, then they must have put 2,800 here. So that would be our step 1. Okay. Secondly, they've credited 1,800 to an equipment account. That's also a step 1. So in my equipment account, they have put 1,800. That's also a step 1. So, and I don't really know why. Let me just see why those. So I don't really want to have lines coming in the whole time, so I'll just get rid of that. Okay, so Oh, look, I'll worry about that after. Um, okay, so that's a step one. So that's what they have done. So what do we need to do? We need to undo that to get the accounts back to zero. So you put the same number on the opposite side. Now remember what I said I'm going to do? I'm going to make that uh, bold and red. That shows that I'm going to put it in. So that's my step two. Okay, the same down here. I'm going to undo that by making it bold and red. Okay, that gets our accounts back to zeros if nothing has happened. So you see there, 2,800 on the left, 2,800 on the right. That brings it back to zero. 1,800 on the right, 1,800 on the left. That gets you back to zero. Okay, so we go to our step three, which is coffee tables purchased on credit. So do what they should have done. So if I go to my rules, if you buy something for your payment, so you're making a payment or a purchase, it's debit what you bought, credit how you bought it. So in this case, it's coffee tables. They are a furniture dealer. So that's one thing to be important of or to be aware of. Always know what type of business they are. So if they're a furniture retailer, they're buying coffee tables to resell them. It is not equipment, for instance. So it's debit what you bought. In this case, purchases of 2,800, and credit how you bought it. You bought it on credit, so 2,800 there. Now there are your step threes. And we're going to put those in, circle them. So again, I don't have a way of circling them, so we'll just make them red. And bold. So that's what we've corrected all the mistakes now. So we've done what they've done and undid it to get it back to zero, and then we've done what they should have done. So we have to put all of our changes in the journal. So the journal will go into your record book too if you're putting it anywhere. So I will make a record book too, possibly. But we'll make a record book too. It'll just bear with me for a second. So in my journal, I've got debit and credit. And what we put in is our accounts or any changes that we've made. So our first one is purchases. And we've 2,800 on the left. And my second one, we've got our step two and our step three. So we've 5,600 on the credit side of creditors. We've the 2,800s together. So that's 5,600 on the credit there. That's creditors. And then my third one, we have a 1,800 on the debit of equipment. So that's going to go into our journal on the debit of equipment. So if we look at this now, this adds up to 4,600, and the credit side adds up to 5,600. So they're not balancing. And when they don't balance, we put in that there's a suspense. Okay, and the suspense is 1,000 euros. So now both sides add up to 5,600. They also have to put in a legend, which would be worth a mark. So what have they done? Well, they've made a mistake in the recording of the purchase of goods on credit for resale. So it's being, did I say, correction of error in treatment of a credit purchase. Something like that, and that'll get you the marks. Okay. All right, so move on to the second one. So it says A delivery van which had cost 2,400 and with a book value of 1,500 was sold for cash for 1,350. Now that is your step three. That is what we want to record correctly. So we have we have sold something. So it's credit what you sold, in this case delivery vans, debit what you got for it, in this case cash, and it's not, they don't equal up. So there's obviously a profit or loss on the uh, on the uh, on the sale of the motor vehicle. Okay, so anytime you sell a fixed asset, there'll be a profit or loss. So we'll have a look at that. So then, first thing, we have to do what they have done and undo it. All right, so this is, let me just, so this is number 2 here. So what have they done? They have entered as 1,350 in the debit of the sales account. So it's telling you that they have put 1,350 on the debit of the sales account. I am going to undo that by putting 1,350 on the credit of the sales account, and I'm going to circle my work. So remember what I'm saying. I'm going to make them red and bold to circle. Okay, that gets the sales account back to 0. It also says it's been entered on the credit side of the debtors account. So I'm going to do what they've done. So they've put in the credit side of the debtors account 1,530. Sorry, it was 1,530, not 1,350. So that's what they've done. That's their step 1. And we're going to undo that by putting the same number on the other side and circling. Okay, you can of course use different color pens. Maybe it might help to use different color pens rather than to circle stuff. See what you think yourselves. It's about coming up with your own strategy for these ones. So that gets both of those accounts back to 0. So then we have to do what they should have done. So what should they have done? We'll read it again. A delivery van which had cost 2,400 and its book value of 1,500 was sold for cash 1,350. So, all right, so think about it. Remember when we did tabular statements, when you sell a delivery van, you always get rid of its cost and its depreciation. So we have to do the same here. So we've got our delivery vans. You credit what you sold. So in this case, we sold delivery vans. So we sold delivery vans which cost 2,400. Okay, so that's our step 3 for that part. Okay. So if you sell the delivery van, you also sell its depreciation. So we're going to put in there accumulated depreciation on delivery vans. So you don't have the depreciation anymore. So what was the depreciation? If it had cost 2,400 and at a value of 1,500, that means it had depreciation of 900. Depreciation is a liability. You don't have that anymore. So that's your step 3 there. And you should see then that the 2,400 minus the 900 is 1,500. Okay, so that's an overall impact of minus 1,500 on your delivery vans. Just you always have to treat them separately. So what have you done then? You've received cash. So we've received cash. So our cash has gone up, cash being an asset. So debit the cash. You've received cash of 1350, and that's your step 3 there. So you've received cash, so debit cash. So if you remember that, you can also think about what's happened. It's an asset. Assets go up on the debit side. All right, so that's that one. So you've gotten 1,350 for a van that was worth 1,500. These do not balance, right? So this is 2,400. This is uh, in effect, what's this? 2,250. So the debit side has to equal the credit side. So we said it's a couple of ways of looking at this. 2,400 on this side and 2,250 on this side, which means a loss of 150. Or you can say the van was worth 1,500. You got 1,350. That must be a loss of 150. So losses are expenses, right? Um, And remember, I also said expenses go on the debit side only. Okay, so 150 there is our step 3 for this one. Okay, and again, we're going to circle that or put it in red, as I've done here. So we have to journalize all of that. So all of the ones in red are going into our journal. So we've got our sales of 1350. So this is our second one, sales, and that was a credit of 1530. Debtors has a debit of 1530. You should see at this stage we're not going to have a suspense. The debit equals the credit, and it's going to be the same all the way down. The next one is delivery vans 2,400 of a credit. They've gone down by that amount. Your accumulated depreciation of delivery vans has gone down by 900 as a debit. Accumulated depreciation being a liability, so that's you've gotten rid of the liability. Your cash has gone up by 1350, that being the current asset. And you've made a loss, which is an expense, of 150. So you see 1530 this side, 1530 that side, 2,400 on the right, and 2,400 on the left here. So there is no suspense in that. I can see that straight away. So what are we correcting? Being a correction of sale of van incorrectly entered, something like that. Okay. All right, the next one, handy enough, hopefully. So it says insurance due and rent prepaid were not recorded in the books. I probably wouldn't even bother doing T accounts in this as go forward, but anyway, we'll show them the T accounts. So they weren't entered at all, so there's nothing to undo. So you go straight to step 3 now. All right, so this is number 3. There's no step 1 or step 2, so straight to step 3 with all of these. All right. So insurance due were not recorded in the books. So what's insurance due? It's money we owe, so it's a liability. So 340 has to go onto that side. Okay. And then the double entry to insurance due is insurance profit and loss account. So you've got your insurance expense account. And you add on insurance due at the end of the year. So that is a debit. These are straight to step 3. I suppose I should write them in there just to be consistent. Okay, so that's that one. The second one is rent prepaid to Sexton. So uh, we've received this money. Rent prepaid is also a current liability. You owe that money back to the the person you're renting off them if they leave. So rent prepaid is a liability. That was for 460. And that's our step 3 there. That's on the debit side. So rent then as an earning in the profit and loss. Well, then you're going to take that away from the earnings on the credit side, so it's going to be removed away. It's just a simple double entry for 60. So once you know that rent prepaid is a liability, it should be okay. Okay, that's all we have to do with that. So again, they're just all step 3s. Okay, so then when we journalize it, the 4 accounts go in. We've insurance due of 340. Stay on the same side. And we've got insurance as an expense of 340. And then we've got our rent prepaid as a liability of 460. And we've our rent received as an earning of 460. And how are we going to record that? It's just something omitted from the books. So being insurance due and rent prepaid omitted. That should do it there. Okay, next one, number 4. A credit note sent to a debtor for 620 had been entered in the books as 260 and was subsequently posted to the incorrect side of the ledger account. So it's been entered in the day books. The day books are the books of original entry. So before you even get to the T accounts, they've put in the wrong number and then they've put them on the wrong side when they put them in the T account. So what it's saying really there is that a credit note sent to a debtor had been entered in the books as 260 on the wrong side of the accounts. The day books thing isn't that important. So again, let's do what they've done, right? So we'll just clear that. So we'll have our step, this is, sorry, number 4. We'll have our step 1 now in a second. Once I've these. So we need to know the accounts we're using. So credit note sent to debtors, so we definitely know it's going to be debtors account. You send credit notes to debtors when they return goods. So it's going to be sales returns. And just so as you know, debtors can only ever match up with sales or sales returns. Can't match up with anything else, really. I suppose it maybe if you sold furniture or something, or sold a vehicle on credit, be debtors. But generally, debtors matches up with sales and sales returns. So if debtors goes down, it should be on the right hand side. So what should have happened is they should have put, this would be your step 3. They should have put 620 there and there. Now I'm just going to come back to that. Right, that's what should have happened. So what they have done is they have put in 260 here and here. So they're your step 1s. Okay, they put the wrong number in on the wrong side. Now we don't have to do anything with those. We're not, I'm not changing them to red because that's what they've done. We have to then undo what they've done. So by using the same number on the opposite side. It's nice and easy because they've just put in the wrong figure on the wrong side. So we're going to circle those, or as I said, we'll make them red and bold. That gets both accounts back to zero. You can see that. If 260 on the left, 260 on the right, 260 on the right, 260 on the left. So what should it have been? Remember what I said, debtors have gone down by 620. So this is our step 3. And debtor and sales returns is 620 on the opposite side. Okay, so we'll circle those. In this case, I'll just put them with a red pen, as I've been doing with all of them. Okay, so we then have to journalize what we've done. Again, you should see there isn't going to be a suspense in this because you're going to have the same numbers on both sides. So we've got 260 and 620 on the right hand side of debtors. So that is our what's that, 880. So we're going to put 880 on the right hand side of debtors. And we're going to have 880 on sales returns on the right hand side. Okay, and what will it be? Being incorrect recording of our return to debtors. Something like that will do the job. All right, number 5 then, this is your one that you'll always have. So Sexton returned furniture previously purchased on credit for 27,000. This was entered in the accounts as 37,000, so he's putting the wrong number in. However, credit note showed supplying the transfer charge of 500. The only entry made in respect of the credit notes. The second part was a credit entry of 26.5 in the creditor's account. So we're going to treat this as 2 parts. Deal with the first part. Sexton returned furniture purchased on credit and it was entered in the accounts as 37,000. So our 2 accounts will be purchases, returns, and creditors. Okay. All right. So step 1, we put in what they did. So purchases, returns, and creditors. So creditors going down. They've put in 37,000 here, and they've put in 37,000 there. So that's what they've done. Okay. So step 1. Step 1. All right. So we're going to undo that by putting it on the other side. 37,000 there. Circled, and 37,000 here, and we will circle that. Okay, so that gets both accounts back to zero for the first part, for this up as far as 37,000. Now, I'm not going to do it, they should have done as far as there's no point. So, however, a credit note arrived showing a transport charge of 500. You can ignore that. The only entry made in respect of the credit note was a credit entry of 26,500 in the creditor's account. So this is another step 1, right? So 26,500 there. So step 2 is to get it back to zero. So we'll put the 26,500 on that side. And that gets all of our accounts back to zero. So you see the same numbers on both sides. Same numbers on both sides. Both accounts are at zero. So what should it have been? Well, it should have been a credit note originally for 27,000, but there's a credit note of 500. Or sorry, there's a restocking charge of 500. So we're really only getting a credit note for 26,500, which is the same number again. So what happens if you get a credit note, if you return goods? Well, creditors go down by the amount, so it's 26,500 again, right? So it's always the same number again under step 2. And then we'll have another 26,500 on the purchases returns for step 3 there. So that's what they should have done. So the double entry should have been debit creditors by 26,500, credit purchases returns by 26,500. All right, so all we have to do is journalize that. So we'll take our numbers. So the purchases returns account has 37,000 here. And it's got 26.5 there. So that will give us what? 10,500 more on the debit side. So in our journal, we'll have purchases returns, 10,500. The second account is our creditors, which has, what's that, 53,000 here and 37,000 there. So that is 16,000 on the debit side of creditors. So that's what, 26,500. On the left, there's 0 on the right, so that gives you 26,500 suspense. And what that be? Being a correction of, what is it? Purchases returns incorrectly entered. Okay, so that's your journal done for your 40 marks. Now, that should be all of your hard workings done. All right. We're now going to use the journal to complete the rest of the question. So the rest of the question asks us to prepare the suspense account. The suspense account is just a T account with the 2 suspense entries in it, or the 3 suspense entries in it. I'm not sure, is it 2 or 3? It's 2 from number 1 and number 2. So what we do, I'm going to do it sort of, where did I do it? I'll do it here. So all we do is we make a suspense account. On the debit side, we put our debit suspense, which is 1,000. On the credit side, we put our credit suspense, which is 26,500. And then we'll balance it. So the balance is 26,500 minus 1,000, which is 25,500. And we call that the original difference. Okay, so now both sides add up to 26,500. And that's all you have to do for that. There's nothing more, okay? That's you put in your 2 suspense numbers. Now you're supposed to put in what they come from. So the first 1,000 from the top is from equipment and creditors being incorrect. So we'll just put in equipment and creditors. And the second one is from purchases one, which is creditors and purchases being incorrect. Okay, and that's it. You're just making a T account for those. I'll just draw those lines in. Right up forward. Okay, so that's it. Nothing more to the suspense account than that. The really important thing is this original difference that we work out, because we're going to use that later on. So that's part B done. You're up to 60%. Part C, prepare a statement showing the corrected net profit, and Part D, prepare a corrected balance sheet. They go together. Okay, so I'm going to have to do this out. So bear with me. Okay, it's probably 5 or 6 lines of that. Then our balance sheet, and just for our balance sheet, right? We're taking all of these things here: premises, equipment, motor vehicles, and we're going to rewrite them out. Okay, leave a few lines, always, just in case there's any extra ones to go in. So stock, debtors, cash. I definitely leave a couple of lines there. Creditors less than 1 year. Okay, we've got creditors in bank. And again, definitely leave a few lines there. We already know that there's insurance prepaid or insurance due, rent prepaid, to go in there. And then we've got finance by, and we've got issued share capital and profit and loss. Now, they did a decent thing in that they didn't have capital or drawings in this one, but most years you've seen that there's capital and drawings. So I'm going to go back to my PowerPoint. We'll go through our rules for the corrected net profit and the balance sheet. So anything that will be in a trading, anything in the trading profit and loss account. So what we're thinking about there will be sales, purchases, sales returns, purchases returns, any expenses or any gains, any profits on sale, or any loss on sale. They're the only things I can think of off the top of my head. The rules are as follows. If it's credit, you add to profit. And if it's debit, you subtract from the original profit. Okay, so just bear that in mind. Anything in the trading profit and loss account, if it's credit, you add. If it's debit, you take it away. Doesn't matter whether it's sales, doesn't matter whether it's purchases, doesn't matter anything at all what it is. If it's in the trading profit and loss account, but it's in your journal as a credit, you add it. If it's in your journal as a debit, we will take it away. Okay, now where do we get our original net profit from? It's that number there, that 88,000. Okay, so I'm going to start here and I'm going to put in my original net profit of 88,000. I'm going to make myself an add. I'm going to add on any credits. So I look to my journal. So what have I got in my journal? Have I got any say or any, let me see, any credits that are trading profit? Let's go. Well, there, I've got one there. See, my sales of 1530, that's a credit, so I'm going to add that on. So I go to my corrected net profit and we write sales and 1530. I'm just going to bring this over a column to make this easier for myself. Okay, and I look to the rest of my journal. Have I any other credits that are to do with the trading profit and loss account? Well, delivery vans is balance sheet. Insurance due is a liability, that's balance sheet. Rent prepaid is liability, that's balance sheet. Debtors is a asset, so that's balance sheet. And the suspense we've dealt with. So that was our only one. So I'm going to add that on. Okay. And then I'm going to take away any debits that are from my journal. That would be trading profit and loss account. So I'll go through my debits. So we've got our purchases here. That's a debit, so we'll take that one away. We've got equipment, well, that's balance sheet. We've got debtors, that's balance sheet. We've accumulated depreciation, that's balance sheet. Cash is balance sheet. We've this loss on the sale of 150. So the first one, sorry, was 2,800. So then keep going down, looking at my journal. Um, we've got insurance as an expense of 340. So that's in the trading profit and loss account. It's a debit. It doesn't matter that it's an expense. It's just that it's a debit as something that would be in a trading profit and loss account. So we take that away. We've got our rent received, which is an earning, but it's in the trading profit and loss account 460. Rent received is in the trading profit and loss account. It's a debit of 460, so it gets taken away. So again, it does not matter that it's rent received. It's actually reducing rent received. That's why it's a debit. Sales returns of 880. That's a debit. So sales returns will be in the trading profit and loss account. Okay, and I'm going to remain space. So skip a few lines here. So my last one then for my journal is my purchases returns, which will go to the trading profit and loss account. That's a debit, so we're going to take that away as well. So what we do, add up those, take them all away. That gives you your correct net profit of 74,400. Okay, so our rules for a balance sheet. Okay, I'm going to flick back over to my PowerPoint. Our rules for a balance sheet for assets and also for drawings. We're going to add debits from the journal and we're going to subtract credits from the journal. So if we had a debit of buildings, we would add that to buildings. If we had a debit of drawings, we would add it to drawings. If you had a credit of stock, you would take it from stock, so on. Okay, so it's add debits, take credits for assets and drawings. For liabilities, for liabilities and capital. Capital is also a type of liability. We add credits and we subtract debits. Okay, that's how we operate. We add credits and subtract debits. So if there was a credit in the journal of on rent receivable due, well, we would add that on. Okay, if there was a debit from creditors, you would take it away. So it's add debits, add credits and subtract debits. So again, now this is where we start with these original figures, and any changes that come in we use. So let's look at our premises first of all, and we see, has premises changed? Well, look to our journal. Is there any mention of premises in our journal? I'm pretty sure there isn't, and there pretty much never is. So there's no mention of premises there. So premises started at 630. It stays at 630. There was no depreciation, so its value was 630. Um, what about equipment? Well, I think there is with equipment. So let's have a look. Yeah, there was. From the first one, there's a debit of 1800 on equipment. So going back to our rules, for assets, we add debits. So for equipment, we take our equipment figure, which started off as 56,000, and we're going to add 1800. And that is 57.8. I think, no, depreciation of equipment didn't change. It was depreciation of the other one that changed. So keep the depreciation of equipment at 12,000, and then it's 57,800 minus 12,000, which is 45.8. Now, my motor vehicles, which started at 92, that definitely changed, as did the depreciation. So just be aware that the depreciation changed in that as well. So let's go find our delivery vans, our motor vehicles. Working two, motor vehicles changed by a credit of 2,400. So crediting an asset is reducing it. So motor vehicles is going down by 2,400. So the cost figure is 92,000. So 92,000 minus 2,400 is 89.6. So just check that. Minus 2,4 is 89.6. Our depreciation, remember depreciation is a liability. So our accumulated depreciation of motor vehicles is a liability of 900. Sorry, a liability of 26,000, and there's a debit of 900. So your rules for liabilities are you take away debits. So that 900 has to come off the 26,000. So it's going to go to 25,100. Sorry. Where are you? So I'll just put it in brackets here as well. Minus 900. So it's 26,000 minus 900. I rushed up that a little bit. I'm hoping there was no other changes to equipment. I don't think there was. Now, the stock is the one that includes suspense. I'm going to come back to that at the end. Um, I'll show you why the rules are slightly different for the one that includes suspense. So for debtors, all right. Had debtors changed? Debtors have changed at least once, maybe twice. So we'll have a look. Debtors, there's a debit of debtors of 1530. Debtors is an asset, and there's a credit of debtors of 880. So we're going to add the debit, take away the credit. That's our rules. So debtors started off as 41.6. We're going to add the debit of 1530 and take away the credit, which was 880. So that'll be 41. So that'll be 40. Oh, should I do it here? 41.6 plus 1530 minus 880 is 42,250. Then I've got cash. Cash started at 2.4. I'm not sure if cash changed. Cash did change. There's a debit of 1350. So we're going to add on that 1350 on. So it's 2,400 plus the 1350. So that's 3,750. I don't think there's any extra. We'll see at the end if there was. So We then have our creditors. I'm having a disastrous spelling here today. So creditors started off at 72,000. There's generally a couple of changes to creditors. So we look in the journal. First one, there's a credit of 5.6. Creditors being a liability. So our liability rules, we add the credits on. So that 5.6 needs to get added on. Then we look to the journal again. In the second one, there's no creditors. In the third one, there's no creditors. And the fourth one, no. In the last one, there's a 16,000 on the debit. So that's a minus 16,000. So 72,000 plus 5.6 minus 16,000 is 61.6. Bank bizarrely, I don't think changed. Bank generally pretty much changes 3 or 4 times in most questions, but no mention of bank there. So bank stays the same, or in this case, the bank overdraft. What we did have though, and I'd made reference to it before, we had these two liabilities here. Insurance is an expense due and rent prepaid of 460. So both of those have to go in. So the 340 and the 460. So insurance due. So 0 plus 340. And rent received prepaid. So remember we said we owe that money back of 460. Okay. Finance by capital did not change. Again, that is fairly strange that capital doesn't change because it normally does. So the issued share capital is 700,000. Now the profit and loss is our new corrected net profit. So 74,400. All right. Okay, so to finish it off, we just have to put in the stock. Now, stock started off as 98,000. And we go, and there was a suspense, an incorporated suspense. All of the mistakes that we've corrected were just thrown in together with stock. So the mistakes that we corrected were our suspense account. And the original difference was 25,500. See, do I hear the original difference on the debit side? You use the opposite rules for suspense. So if it's on the debit side and it's an asset, you take it away. Okay, so I'll put that in the notes then as well. So if it's on the debit side and it's an asset, normally you would add it on. But for the one that incorporates suspense, you take it away. Because what it's saying is that there's 25,000 too much on this side. So to undo it, you have to put 25,000 on this side as a minus. So we're taking it away from the 98,000. So it's going to be 98,000 minus 25,500. Which is 72.5. Now, if you've done everything correctly at this point here, everything should balance up. All right, so we'll just check. Everything will balance up. I'm pretty confident on these ones, unlike some of the questions. That's famous last words, of course. So current assets minus current liabilities. And then add your answer on. 774,400, 700,000, 74,400. Add the two together. 774,400. Okay, it's our capital employed. So that's all balanced. So again, I'll just put into the notes the workings that I said on the suspense. So whatever incorporates suspense, changing the item in the balance sheet, incorporating suspense. So what we do is we take the original difference from the T account for assets that incorporate suspense. In this case, You had your stock incorporating suspense. Debits get taken away. So if the original difference is debit, original difference from the suspense account, subtract it. If it's a credit, add it on. And it's obviously vice versa. So for liabilities, if the original difference is a debit, add it on. If it is a credit, take it away. Okay. Last thing, I'm just going to go back to the top here actually, and I'll just put in what I have on my old Excel, right? So just remember, if an asset is increasing, you debit it. If an expense increases, and expenses can only increase really, you debit it. For my liabilities, if a liability increases, you credit it. If a liability decreases, you debit it. And remember what I said then around the rules. If you're buying something, you debit what you bought, credit how you paid for it. And it's the opposite if you're selling something. So you just think in terms of that about what's happening to the asset or the expense. It should make it easy. I am absolutely very conscious of the fact that this may not have been too clear, but hopefully it's some way helpful. All right. We'll come back to it again. Good luck, lads. Just think better saved. Oh, you're kidding me.